All right, good afternoon, and thank you so much for joining us today for Navigating PPP Loan Forgiveness. I'm Jackie Petroselli, the Marketing Specialist at MP. For those of you joining us on a webinar for the first time, MP is a full-service human capital management services company. We provide a single solution and support for HR, payroll, benefits administration, time and attendance, and compliance. And now to introduce our presenters today. So we have two Amandas on today's presentation. The first one is Amanda Leonardi. She's an HR generalist at MP. She currently provides HR support to small, medium, and large-sized businesses in a variety of industries and previously managed HR for a 250-employee nonprofit organization. Amanda received her BA from Duquesne University in Pittsburgh and has recently become a certified HR professional through SHRM. Next up, we have Amanda Bridge. She's also an HR generalist at MP for the last 4 years. She currently provides HR support to small, medium, and large-sized businesses in a variety of industries and was previously an HR generalist for a 200-plus employee pediatric nonprofit organization. Paul Corellis is the VP of HR and Client Services at MP. He has over a decade of experience in the HR consulting space, working with businesses of all sizes and industries. Paul and his team of certified HR professionals at MP assist clients with compliance, training, and full circle HR guidance and support. And with that, I'm going to hand the mic off to Amanda.
All right, thank you, Jackie, and good afternoon, everyone. Thank you for joining us today. We tried to keep it easy on you and have two Amandas present, so you only need to remember one name amongst all of the information that we're going to throw at you today. And then we're going to pass it over to our fearless leader, who you all already know and love, Paul Corellis, to answer all of your burning questions. First, we have our little disclaimer here that we switched up a bit today to not only include a legal disclaimer, but also a financial disclaimer. This training is intended for educational and informational purposes only. We are not attorneys or financial advisors, and the information we discuss today should not be construed as legal or financial advice. All right, so as you all know by now, the SBA released the PPP loan forgiveness application this past Friday night. And we had all been waiting with bated breath for this. And the good news is that this application did provide us with some new information and answered some hot topic questions, which we will go through today. But not to be a Debbie Downer, but the application definitely drummed up some new questions that I'm sure are on your mind. Unfortunately, we still do not have full guidance and rules from the SBA, and you've probably sat here listening to us say we're expecting to get the rules soon. For the past 2 months we've been doing these webinars, so I'll spare you that little spiel today and just commiserate with you instead. We are right there with you, feeling that frustration and doing everything in our power to interpret the ambiguous information that we have to the best of our ability. That being said, please keep in mind that as we go through this presentation today, we do still need quite a bit more of information, but we will certainly continue to keep you informed as further insight is released. So what are we going to cover today? We will go through what we learned from the PPP forgiveness application, the safe harbors incorporated into the program, costs eligible for forgiveness, documentation necessary for forgiveness. We'll walk through how to complete that extremely confusing forgiveness application, and then we will go through your questions. And with that, I am going to turn it over to Amanda Bridge to get into the new information that we have.
Good afternoon, everyone. Thank you for joining us today on this beautiful weather that we're having. Let's dive in and talk about what we have learned from this 11-page forgiveness application. Originally, this is what we were told. The loans were to be used during the 8-week period following the disbursement of the funds. The forgiveness application now defines that as the covered period, and that's going to be important to remember as we hear and see that term more frequently throughout the presentation and through the application. We have learned that the forgiveness application offers 2 different options into defining periods of time for purposes of loan forgiveness. First, we have the option of the covered period, which we were just speaking about. That is the 8-week or 56-day period where the funds must be used at the same time the loan was disbursed. So, if a borrower receives a PPP loan on Monday, April 20th, the first day of the covered pay period would be April 20th. And the last day, which is 56 days later, would be June 14th. The other option is the alternative payroll covered period. A little bit wordy there, but I think we'll all kind of get used to saying that sooner or later. So this is where borrowers with a biweekly or more frequent payroll schedule can elect to calculate eligible payroll costs using that 8-week, 56-day period that begins on the first day of their first pay period following their PPP loan disbursement date. This is the alternative payroll covered period. So now if I haven't completely confused you, we'll take a look at an example. So a borrower received their PPP loan proceeds on Monday, April 20th. And the first day of their first pay period following the PPP loan disbursement is on Sunday, April 26th. So the first day of the alternative payroll covered period is April 26th. And the last day of the alternative payroll covered period is Saturday, June 20th, or 56 days later. I also want to note that on this forgiveness application, there are sections that will reference both the covered period or the alternative payroll covered period. When you decide what method to use, it is important to be consistent throughout the application and stay with that method, except when the instructions reference just the covered period, and then you'll want to use that method. So finally, I think this is the most exciting part for me. We finally have some clarity on the definition of a full-time equivalent, or FTE, and that is 40 hours, and not the presumed 30 hours that we were hearing from before. This formula I'm going to talk about calculates the average FTE during the covered period, or the alternative payroll covered period, which we were just discussing. You will want to reference whichever period you choose when calculating the FTE count. Two options for calculating FTE are the calculation method and the alternative measurement method. In the calculation method, you will want to take the average number of hours paid per week, then divide that by 40 and round to the nearest tenth, with the maximum for each employee being capped at 1. Let's look at an example on the next slide. As I mentioned, for each employee, you will want to enter the average number of hours paid per week, then divide that by 40, and then round to the nearest tenth. The maximum for each employee, again, is capped at 1. So if you're wondering how I got to 0.9 in this calculation for someone that works 35 hours a week, it's just going to simply be dividing 35 by 40, which then would equal 0.875. That rounded to the nearest tenth is going to be 0.9. A simplified method is the alternative measurement method, which simply assigns 1 for any employee who works 40 hours a week or more, and then assigns 0.5 for any employee who works fewer than 40 hours a week. So we'll take a look at that method right now. As you can see, we assigned 1 to any employee that worked 40 hours or more, and 0.5 for any employee who worked fewer than 40 hours. The calculation method gave us a number of 3.4 full-time equivalents, where the alternative method, totals 2.5 full-time equivalents. It's important to note that the borrower is able to choose which method would be the most beneficial to them. As an employer who considers full-time at possibly 30 hours a week, 35 hours a week, you would want to use the calculation method as to not inflate the FTE count. And for MassPay clients that are in our iSolve platform, those reports are going to be updated soon, and you'll be able to calculate these totals through that. So salary, hourly wage reduction. As we have already known, an employee cannot reduce their salaries more than 25% during the 8-week period. If you restore your wage levels to the pre-pandemic rates, your forgiveness may not be impacted. You will want to compare your salary or hourly wages from the covered period to the period of January 1st, 2020 to March 31st, 2020 to determine if you have any salary or hourly wage reductions. This will make more sense when we go through the example later. We are now going to kind of discuss some of the PPP forgiveness safe harbors that have come up. For those of you who have received loans that are less than $2 million, we have some good news. If you remember back, many folks applied for loans right when the program opened up because they were told that it was first come, first served. After many businesses applied, the SBA came out and said that the loans needed to be certified in good faith that the current economic uncertainty makes this loan necessary to support the ongoing operations of the applicant. This was concerning to some that didn't see much of a business declined after they had applied for the loan or then reopened their business. But the good news is that they were then implemented a safe harbor that both states that if you received a loan under $2 million, it will be presumed that you made the clarification concerning the necessity of the loan in good faith. The reasoning for this is that smaller businesses are taking bigger hit through the pandemic, and those businesses are less likely to have access to an adequate source of liquidity in the current economic environment. Additionally, the SBA just doesn't have the bandwidth to review all of these loans, so they're just going to focus their auditing resources on any larger loans. For those of you who have loans over $2 million, you may still have an adequate bias for making that required good faith certification, but your loan may be reviewed by the SBA, and it will really depend on any individual circumstances, whether they choose to review your loans. Also, there is a safe harbor in place surrounding reduction of your FTE count that states that the loan forgiveness will not be impacted if the following two conditions are met. The first condition being you reduce your FTE employee levels in the period beginning January 15, 2020 and ending April 26, 2020. And also, you restored its full-time equivalent employees levels back up by no later than June 30th, 2020 to your full-time employee levels in the pay period that included that February 15th, 2020 date. We will go through an example calculation on this safe harbor a little later in the presentation. There are also exceptions to the FTE reductions. The first exception states that if you had to lay folks off and then recall employees, but have employees voluntarily reject that offer, your forgiveness will not be impacted. In order to keep this exception and have it be applicable, you will have to do a few things. So you must offer the employee the same salary or wages and the same number of hours. You must document a written offer of rehire. You must document the employee's rejection of that offer. It's also important to note that any employee who rejects this offer for a reemployment may forfeit eligibility for unemployment. So you and the employees should be aware of that. The second FTE reduction exception states that forgiveness will not be impacted if employees during the 8-week period are fired for cause, voluntarily resign, or voluntarily request and receive a reduction of their hours. So any FTE reductions in this case do not reduce your loan forgiveness, which is great news. Now I'm going to pass it back over to Amanda, and she's going to go through the eligible costs.
All right, so we got some clarification on eligible costs from the application, which cleared up some questions that we had. Let's look at eligible payroll costs first. So the application stated that borrowers are generally eligible for forgiveness for the payroll costs paid and payroll costs incurred during the 8-week, 56-day period, whether that be during the covered period or during the alternative payroll covered period. So what are the definitions of paid and incurred? Payroll costs are considered to be paid on the day that paychecks are distributed or the borrower originates an ACH credit transaction. When we're talking about payroll costs incurred, we're talking about the day that the employee's pay is earned. The application also stated that payroll costs incurred but not paid during the borrower's last pay period of the covered period or the alternative payroll covered period are eligible for forgiveness if paid on or before the next regular payroll date. Otherwise, payroll costs must be paid during the covered period or alternative payroll covered period. So for example, let's say today is the last day of my 8-week period. If I've worked all this week, those are payroll costs that have been incurred, but the end of the pay period isn't until Sunday, and then I'm not getting paid until next Friday for those hours worked. As long as the costs were incurred during the 8-week period, the pay that I'm going to receive in my paycheck next Friday for work that I did this week could be eligible for forgiveness, even if it's paid outside of that 8-week window. So that's also some good news. As we've known, for each individual employee, the total amount of cash compensation eligible for forgiveness may not exceed an annual salary of $100,000, prorated through the covered period, which comes out to be $15,385 over the 8-week period. And then you must count payroll costs that were both paid and incurred only once. So those are the payroll costs. Now let's take a look at the non-payroll costs. The forgiveness application states that an eligible non-payroll cost must be paid during the covered period or incurred during the covered period and paid on or before the next regular billing date, even if the billing date is after the covered period. So again, this may come into play in a situation with utilities where you're incurring your electric bill during the month of May, but you'll not be billed for that until mid-June. So if your covered period ends June 1st, but you aren't getting that bill until June 15th, as long as those costs were incurred during the 8-week period, that could be counted as a forgivable expense. As we know, eligible non-payroll costs, however, cannot exceed 25% of the total forgiveness amount. And then the application, again, with the non-payroll costs, specifies that you are to count non-payroll costs that were both paid and incurred only once. The forgiveness application also clarifies that payment of interest on business mortgages relating to real property or personal property that were in effect before February 15th, 2020 are eligible for forgiveness. So things like interest on loans for equipment or vehicles are allowed, but prepayments are not permitted. We also got a little information about rent or lease payments, and it clarified that business rent or lease payments pursuant to lease agreements are forgivable for real or personal property that were in effect before February 15th, 2020. So again, leased office equipment like copiers or leased vehicles are an eligible expense. And then we already knew this information, but just to reiterate, payments for services for the distribution of electricity, gas, water, transportation, telephone, or internet access that were in effect before February 15th, 2020 are also forgivable. Now, some of the most frequently asked questions we're getting surround what counts towards things like transportation or telephone. Does cell phone service count? Does mileage count? And these are great questions and questions that we all have. So unfortunately, there is very limited concrete information out there surrounding this. So we are waiting to get some more formal guidance surrounding these type of utility costs. All right, now Amanda is going to walk you through the necessary documentation you need for PPP forgiveness.
The documents that will need to be submitted with the application are going to be what is listed right there, but the PPP loan forgiveness calculation form, PPP Schedule A, and payroll support. So payroll support are things like bank account statements on third-party payroll service providers, reports on documenting the amount of cash compensation paid to employees, tax forms for the periods that overlap with the 8-week window. So things like payroll tax filings reported or that will be reported to the IRS, typically that would be the 941 form, and any kind of state quarterly business reporting and unemployment insurance tax filings reported, or that would be reported to the relevant state. Payments receipts, canceled checks, or bank account statements documenting the amount of any employer contributes to the employee health insurance and retirement plans that you include in the forgiveness amount. They are going to need to be supporting documents also for full-time equivalency numbers. So documents for supporting the borrower's calculation of the FTE, for your payroll provider should be able to help that out with that. And that's why we mentioned our mass pay clients, there will be a report that's going to be created to help with that section of that. You are also going to need non-payroll support. So documentation verifying existence of the obligation services prior to February 15th and eligible payments from the covered period. So for things that fall under mortgage interest payments, you may need to submit or copy a lender for amortization schedule and reports or cancel checks verifying eligible payments from the covered period. Or account statements from February 2020 in the months of the covered period through 1 month after the end of the covered period, verifying interest amounts on eligible payments. For business rent and lease payments, you may need a copy of current lease agreement and receipts or canceled checks verifying eligible payments from the covered period, or account statements from February 2020 from the covered period through 1 month after the end of the covered period, verifying eligible payments for that. For business utility payments, you may need a copy of your invoices from February 2020 and those paid during the covered period, and receipts, canceled checks, or account statements verifying those eligible expenses. So there are documents that need to be submitted with the application. There are also documents that each of you must maintain but are not required to submit, which would be PPP Schedule A worksheet or its equivalent and the following. Documentation supporting the listing of each individual employee PPP Schedule A worksheet Table 1, including the salary hourly wage reduction calculation, if necessary. So then you'll also want to take a look at documentation supporting the listing of each individual employee in PPP Schedule A. That's the worksheet Table 2, specifically that each listed employee received during any single pay period in 2019 compensation at an annualized rate of more than $100,000, which we know is going to be the limit for that. Documentation regarding any employees whose job offers or refusals, firing for cause, voluntary resignations, and any written request by an employee for the reduction in work schedule. Those will all need to be documented as well. So I always advise my clients to always have things in writing where you can have that printed version of it out and to keep for your records. And if you did have a phone call previously, maybe now's a good time to follow up with an email just confirming so that you do have written documentation on certain aspects of things that you've already talked about on the phone that should be in writing. Documentation supporting the PPP Schedule A worksheet, FTE reduction, safe harbor, and all documents submitted and maintained must be retained for 6 years after the date the loan is forgiven and repaid in full. So with all that information, I'm going to hand it over to Amanda, who will talk us through the forgiveness application.
All right, for the moment you've all been waiting for, how on earth do you make sense of this 11-page application and calculate your forgiveness? Before we dive in, just want to reiterate that there are still some pretty significant unknowns that we need answers to before this application can be completed. And you're going to want to fill this out after your 8-week period is completed. So don't spend too much time crunching numbers just yet. I was listening to a banker give an update on all of this information yesterday, and he mentioned that they are just as informed as we are at the moment, and they are still waiting on information from the Treasury. Banks are also still waiting on a form from the government that will allow them to collect and submit for forgiveness through the SBA, so the banks can't even process these forgiveness applications until they receive that. The SBA has also come out and said that it will take you about 3 hours to complete the form. I know the best 3 hours of your life probably. So don't get too far into the weeds without all of the facts, because you can't get that time back. So I also think it's important to be prepared to work closely with your accountant or financial professional on this when the time comes. So we're going to walk through the different steps of the application today with the information we have and give our best faith interpretation of this without having all of the facts. So let's jump in. The forgiveness application, as we mentioned, 11-page document, and it's comprised of 4 components. The first is the PPP loan forgiveness calculation form. Then we have PPP Schedule A, the Schedule A worksheet, and then there's an optional borrower demographic information form. For the sake of time today, we're not going to be covering that portion of the form, but just know that that's optional. And then in order to receive forgiveness, you are going to have to submit 2 parts of this form to your lender. The first is the forgiveness application, and then the second is the Schedule A. Also, just to note, the forgiveness application includes an expiration date of October 31st, 2020, so applications will need to be submitted prior to that. All right, so some words of wisdom. When I first sat down with the application the other day to try and understand the ins and outs of this form, I am not going to lie, it totally had my head spinning and can be extremely confusing. There are really only 3 sections of this form that need to be completed, and the rest of the 11 pages are all instructions. But there is a significant amount of flipping back and forth between sections, and the form is just really not that streamlined. So through my growing pains and the hours I spent trying to dissect this, I have 2 pieces of advice. One, I recommend that you actually work backwards through the application. You'll see, this will make more sense as we go through, but you're going to need information from the PPP Schedule A worksheet in order to complete the Schedule A form, and you're going to need information from the Schedule A form in order to complete the forgiveness calculation. So once I looked at it that way, the process went a lot faster. The second lesson I learned trying to understand this thing was a glass of wine in hand makes it a little less painful. I don't know if that was just a coincidence, but I was going through this for the first couple of times and I was confused. And then I read it over for the third time with a lovely glass of Cabernet and it clicked. So I found the answers at the bottom of the glass. So do with that what you may, but I just thought I would share what worked for me. You're probably going to be wishing that you had a glass of wine as you're listening to me go through this over the next several slides. So I totally get that. But all jokes aside, I do strongly recommend that you print out this application and read it over a few times before you sit down to complete it. It does take a minute to wrap your head around, and it is helpful to have a hard copy printed as there is quite a bit of flipping back and forth. All right, so let's dissect this application. We thought the best way to do this would be by breaking it down piece by piece through an example. So here's our scenario. We have ABC Company, and they received a PPP loan for $150,000. They have 6 employees total. 4 of those are 40-hour per week employees, and 2 are 35-hour per week employees. One owner takes a draw. Their loan was dispersed on April 20th, 2020. They run a biweekly payroll, and they did have to reduce some employee salaries, but they were able to maintain employee headcount throughout the pandemic. So if we work backwards through the application like we talked about, we first are going to start with the PPP Schedule A worksheet, and this is what it looks like on your screen. It's actually on page 9 of the application. And this worksheet will help you determine the cash compensation spent through the covered period. It will help you determine your average FTEs during the covered period, any salary or hourly wage reductions that took place, as well as whether or not you are eligible for that FTE reduction safe harbor. Now, this is where your payroll information is going to be critical. You are going to need that information in order to complete the tables you see on this form. If your payroll provider has a report that can be run that displays all of this information, you can just supply the lender with that report. So it's not like you need to transcribe all of that information into these tables. For our mass pay clients out there, iSolved, Amanda mentioned it earlier, but iSolved is in the process of building out a nice forgiveness report that we are expecting to see released by next Friday, if not sooner. And that report will provide you with the information that you'll need for this worksheet and cut down on your administrative burden pretty significantly, because gathering this information and inputting it manually can take some time. And it looks like, just so that you're aware, it looks like that report in iSolve will be called the CARES PPP Loan Forgiveness Report. So stay tuned for further details on that for our clients. For those of you who are not MP clients, work with your payroll provider to find out if they have a similar report that can be run, because this will make a huge difference for you. So let's break down that Schedule A worksheet. Before you jump into this, one thing that's really critical to establish is whether or not you are going to utilize the covered period or the alternative payroll covered period, and enforce that consistently as you go through the application where it's permissible. As Amanda mentioned earlier, there are portions of this where you cannot use the alternative method, so be sure you're reading the instructions really carefully as you go through. Also remember that you have to be running a weekly or biweekly payroll in order to be able to use the alternative method. You can't use that if you pay employees less frequently than biweekly. So if we look at table 1 on the Schedule A worksheet, you're going to list employees who were employed by you at any point during the covered period or the alternative payroll covered period, whose principal place of residence is in the United States. And you're also going to list anyone who received compensation at an annualized rate of less than or equal to $100,000 for all pay periods in 2019, or were not employed by you at any point in 2019. So tongue twister, what on earth does any of that mean? Essentially, all employees who were on payroll through the 8-week window who made less than $100,000 in 2019 are going to go in table 1, as well as anyone who wasn't employed with you during 2019, even if they are set to make more than $100,000 this year. But remember, if we prorate that 100,000 to match the 8-week period, folks cannot be earning more than 15,385 during that covered period. So you are not permitted to enter in more than that number in table 1 or 2 for any individual employee. So for ABC Company, they had 4 employees to fit into table 1. You enter in the employees' names, employee identifier, which is actually defined as the last 4 digits of the employee's social security number, and then how much cash compensation they earned throughout the covered period. Cash compensation is defined as the sum of gross salary, gross wages, gross tips, gross commissions, paid leave, so things like vacation, paid family or medical or sick leave, but that does not, remember, that does not include leave covered by the Families First Coronavirus Response Act. Those are, you're getting a separate tax credit for that, so it does not include those benefits. But it does also include allowances for dismissal or separation paid or incurred during the covered period or the alternative payroll covered period. Once you have that information, you are going to enter in the average FTE for each employee. Now, you can calculate this one of 2 ways. If we remember back to what Amanda was talking about earlier, you can either divide the number of hours paid per week by 40 and round to the nearest 10th, or you can assign 1 FTE for employees who work 40 hours or more per week and 0.5 for employees who work fewer than 40 hours. You probably want to do your due diligence and test both options out, but just as a general rule of thumb, unless you have several employees that work 20 hours per week or less, you may be undershooting your FTE count using that simplified method. So here I actually use the calculation method. So we have Joey Tribbiani and Dwight Schrute, who both work 35 hours per week. So if you take 35 and divide it by 40, round to the nearest 10th, it comes out to 0.9 FTE. And then we have Ron Swanson and April Ludgate, who both work 40 hours, so they're each 1 FTE. A little shout out to The Office and Parks and Rec and Friends there for the inspiration on the employee names. Now, questions have come up surrounding what to do if I have an employee who works 60 hours per week. These folks still count only as 1 FTE. So anyone who works 40 plus hours in a week are capped at 1 FTE. All right, so now we have the salary and hourly wage reduction in that last column there. And you see a few folks did have their wages reduced. We are going to walk through how to calculate that in a moment. But before we do, I just want you to notice box 1, 2, and 3 at the bottom of your screen that contain the totals. And these numbers are going to be really important moving forward when completing other portions of the form. So just be mindful of that. So let's take a look at the average, the wage reduction. There is a section on the application that helps you calculate this, and I apologize. I know that the font is small, but unfortunately the fillable PDF through the SBA doesn't allow me to bump the size up, so just bear with me here. So if you utilize this manual method, you have to go through this exercise for each individual employee whose wages you reduce. So that's why it is a really big time saver if your payroll system has a report that can automate this for you. But for the purposes of showing you how this works, I took payroll data for April Ludgate. And in step 1A, we enter the average annual salary or hourly wage during the 8-week window that you are using. If we go back to table 1, we see that April had a cash compensation of $9,230 throughout the covered period. If we take that and turn it into an annual salary, it comes out to $59,995 per year. In step 1B, April's average annual salary between January 1st, 2020 and March 31st, 2020 was $85,000. And we got that from payroll data. Step 1C, you divide the 59,995 by the 85,000 and get 0.7058. Now, if this number in 1C is 0.75 or greater, you did not reduce the salary by more than 25%, and therefore your forgiveness will not be impacted. So you can put a 0 in table 1 for that individual. However, that was not the case here. So we need to move on to step 2, which determines if the wage reduction safe harbor is met. If we look at step 2A, you enter in the annual salary as of February 15th, 2020, which in this case was 85,000. 2B, you enter in the average annual salary or hourly wage between February 15th, 2020 and April 26th, 2020, which in this case was $75,000. If the number you have in 2B is equal to or greater than 2A, you can skip to step 3. But if not, you need to enter in the average annual salary as of June 30th, 2020, which we did here, a little foreshadowing, and April is going to be making $65,000 at that time. If the number you have in 2C is equal to or greater than what you have in 2A, then the safe harbor has been met, and you can just enter 0 in the column for that employee. However, again, that was not the case here, so we need to move on to step 3, where we'll determine what our reduction looks like. So step 3A, you multiply the amount entered in 1B by 0.75, which came out to $63,750. And that's the threshold that you would have needed to hit in order to maintain 75% of the employee's wages. Then you're going to subtract the amount entered in 1A from that number, which in our case came to $3,755. So that's how far we dipped under that 75%. Step 3C and 3D are for if the worker is paid hourly, but April in our case is a salaried employee, so we can skip to step 3E, where we multiply the amount entered in 3B by 8, which comes to $30,040. And then this is divided by 52 and comes to $577.69. And this is the value that is then entered into table 1 next to the individual. I totally realize that this is probably, I'm probably speaking gibberish and extremely confusing at the moment, but the good news is that each step on this worksheet really walks you through the steps, and it's pretty self-explanatory, so it'll make much more sense when you sit down with the application and actually put eyes on it, but I just wanted to give you a little insight there. You could also see how long this took us to calculate for just one employee. So this is where hopefully, again, your payroll system can alleviate that burden for you. Okay, moving on to table 2 now. This is where you're going to list your folks who made more than $100,000 for any pay period in 2019. So in ABC Company's case, they had Phoebe Buffet and Leslie Knope earning the big bucks last year, so they go on this table. And notice in the cash compensation column that those numbers cannot be more than $15,385 for the 8-week window, even if someone was paid more than that. You have to stay under that 100K prorated threshold. Also notice that there is not a wage reduction column on this table. That's not a factor for folks who make more than 100K, so you don't have to worry about that. And then also notice box 4 and 5 at the bottom of the form. Again, this is going to be helpful for you later on when you complete later sections. And then last but not least, on the Schedule A worksheet, we have the FTE reduction safe harbor. In our scenario here, ABC Company had 5 FTEs between February 15th, 2020 and April 26th, 2020. And we calculated this using the same method that we used in the tables. For step 2, you're going to enter the total FTE for just the pay period containing February 15th. And we had 6 employees during that pay period. If the entry for step 2 is greater than step 1, you can proceed to step 4. If not, the safe harbor is not applicable. For step 4, you enter your FTE total as of June 30th, 2020, and we have 6 employees, so we have met the safe harbor since that's equal to the FTEs we had in step 2. And getting some feedback here. Let's see. Let's see, where were we? So for step 4, we have met the safe harbor since it's equal to the FTEs we had in step 2, and a 1.0 can be entered on line 13 of the Schedule A form, which we are now going to jump into. So that's the worksheet there, and now we get to the Schedule A form. This form takes the totals from the Schedule A worksheet and accounts for non-cash compensation payroll costs, compensation to owners, calculates total payroll costs, and goes through the FTE reduction calculation. So look at the example here. So lines 1 through 5 are all numbers that come directly from calculations that we made on the Schedule A worksheet. So you can just fill these in accordingly. Then we move on to non-cash compensation payroll costs. So line 6 is where you enter in how much you paid in employer contributions for employee health insurance during the covered period. In this case, they paid $2,500. Line 7 is where you enter how much you paid toward retirement plans during the covered period, which came to $2,500 in our example as well. And then line 8 is how much you paid an employer state and local taxes during the covered period, which also came to $2,500 in our example. And just to reiterate, that's employer, state and local taxes, not employee taxes. Line 9 is where you account for compensation to owners. So we had one owner taking a draw. If an owner is paid as a W-2 employee through payroll, then their comp would go in the Schedule A worksheet under one of those tables. But in this case, we had an owner taking a draw, so we enter in the amount earned during the covered period, which was $14,350. Again, if you have a high earning owner, this number cannot exceed $15,385. If you have, let's say you have multiple owners taking a draw, you would add up all of their wages and put it on this line, but they want you to attach separate tables that list the names and payments to each of those folks. Line 10 is where you calculate your total payroll costs. So you add lines 1, 4, 6, 7, 8, and 9. So we did that, and our total payroll costs throughout the covered period were $85,400. Now, if you remember, we met that safe harbor earlier, so we can just enter the 1.0 in on line 13 and do not need to complete line 11 or 12. If you did not meet the reduction safe harbor, then you would complete lines 11 and 12 and then divide the two to figure out your quotient for line 13 there. And then that wraps up Schedule A form. And remember, this is one of the items that needs to be provided to your lender. All right, last but not least, the last portion of the application here is the loan forgiveness calculation form. And this is going to give you your numbers for forgiveness. So this is a big one. It includes general business information on your PPP loan, and if you received an EIDL advance, so that grant, your payroll schedule, the covered period or alternative payroll covered period that you establish, and then the forgiveness amount calculation that will make FTE and wage reduction adjustments, and then ultimately help you determine your forgiveness. So the top half of this form, again, just general information. You enter in how much your loan was for, in our case, $150,000. When the loan was dispersed, which was for 2020. Employees at the time of the loan application were 6. Employees at the time of forgiveness application were 6 as well. If you received an idle advance, you have to enter in the amount the advance was for here. And these funds, unfortunately, will not be eligible for forgiveness, which they didn't exactly make clear prior to employers applying for the grant. But anyway, so then you enter in your pay frequency, what your covered period is, as well as what your alternative payroll covered period is. Remember, you can only use this measurement period if you have a weekly or biweekly payroll cycle. And then you're going, if your loan was over $2 million, you're going to check that box at the bottom there. Second half of the application are really the numbers. So you enter in the total payroll costs, which we determined on line 10 of Schedule A. You include costs for mortgage interest payments, rent or lease payments, and utility payments. Then you add in the adjustments for reduction in wages from line 3 of the Schedule A form. In our case, it was 1302. You then add the amounts on lines 1 through 4 and subtract the amount entered in line 5, which comes to $97,097. On line 7, you then enter the number from line 13 of the Schedule A, which gives you the FTE reduction quotient. In our case, it was 1. And then you calculate 3 different potential forgiveness amounts. The first is a modified total, and you get that number by multiplying line 6 by line 7. The next, you just enter your PPP loan amount, which in our case was $150,000. And then finally, you calculate the payroll cost 75% requirement by dividing line 1 by 0.75, which comes to $113,867. And then the moment you've all been waiting for, the forgiveness amount. And this is determined by taking the smallest of those potential forgiveness amounts from line 8, 9, and 10. So in our case, if we look at those 3 lines, $97,097 is the lowest. So that would be the amount of the loan that would be forgiven. So are you all okay? I know I just threw a ton of information at you with a lot of numbers and letters and lines and forms and boxes, but hopefully that helped break down the application into pieces so that when you sit down to complete it, you have a good sense of how it flows and how the different parts of the application interplay. All right, I think I've probably confused all of you enough for the week. So I'm going to throw it over to Amanda B. and Paul to answer some of your most frequently asked questions.
Great. Thank you so much, Amanda, for taking us through that loan application process. You did a great job.
So I know we have some kind of pre-written here. A lot of these were answered during the presentation, but there are a couple that I'd be happy to clarify as well. Also, we've got a ton of questions in. Unfortunately, my internet crashed, so I'm a panelist, so I only have the questions in front of me that were submitted since I got back online. But don't fear, you don't need to re-enter those. We have them saved, and we'll be putting together an answer doc. I did, as the presentation was going on, note down a couple of the really good questions that had come in near the beginning, so be happy to address those as well. We got a lot of questions regarding self-employment and self-employed individuals and claiming that. So for those folks, you want to take a look at your Schedule C and your income. And one interesting wrinkle that wasn't made clear prior to last Friday's release of the instructions and forgiveness form is that not only are self-employed individuals and owners and sole proprietors capped at that $100,000 annualized amount. For those folks, and this doesn't apply to other employees, just the owners, self-employed, sole props, etc. Their maximum forgivable amount is going to be capped at the lesser of $100,000 annualized, that 15,000 and change number, or the amount that they earned last year, 2019. So if your income is reported on Schedule C or K1 or wherever as less than $100,000 for 2019, you're your annualized amount under the PPP loan and forgiveness will be limited to that figure from 2019. So that's an important distinction that wasn't clear early on. Got a really good question at the beginning from an employer has employees whose wages will vary quite a bit throughout the year. So they might have really huge payments at some point that if you annualized it, it would put them over 100,000, but it fluctuates so much that in the course of the year, they don't actually earn $100,000. So I did some research on this because when you read some of the information in there, it just talks about people who earned more than $100,000 last year. But if you look on page 7 of the instructions under the Table A guide, it does say that for no individual can you put more than the $15,000 in change for anyone on any line in either of those tables. So even though they might not be a 6-figure earner over the course of the year, it does indicate here in the instructions that you're limited to that annualized $100,000 amount, even if they did earn more during the 8-week period. Also received a lot of questions about transportation costs, and that remains to be pretty murky as the Amandas explained. I did read some really good guidance on it. So collectively speaking, and again, this is subject to change once the SBA releases some more definitive guidelines, but the growing belief is that the transportation costs would mimic what you're allowed to claim for auto expenses on your business tax filings. So if you look at the line for automobile expenses on your business tax filings, that those eligible expenses that you can put there should also be what you can claim as non-payroll transportation utility costs. So that's a general rule of thumb. Again, at least if you're we're counting on the SBA to provide some more clear guidance on that before anyone submits a application for forgiveness. But in the meantime, if you're just looking to estimate and forecast, that seems like a fairly reliable number to use. Also got a question about the eligibility of bonuses and hazard pay. So this is one of the most burning questions that a lot of companies and people are anticipating and really needing the SBA to weigh in on. I'd say the bonuses are more up in the air. I've seen really strong, compelling arguments on both sides of this. Some people feel that the word bonus was purposely omitted from the definition of payroll costs and compensation, and that it really isn't in the spirit of the law to include bonuses, especially if they wouldn't otherwise be earned during this time period. On the other hand, we've seen other strong arguments that say, yeah, it wasn't necessary to either retain or bring staff back, or is otherwise warranted, and by all IRS definitions does count as wages. So we'll see. We still really need the SBA to weigh in on that before we can confidently advise one way or the other in terms of the forgivableness of bonuses. There does seem to be a more compelling affirmation that hazard pay is allowable and permittable as a forgivable expense. Again, that hasn't been set in stone. It's not black and white. It's not confirmed, but most people feel that will fly. A lot of questions here about forgiveness when it comes to utilities and the periods and predating and postdating. So one thing to be clear, when we talk about that alternate pay period where you can shift things to the first check date or the first day of the pay period following receipt of the funds, that applies to the payroll costs. You can't really shift your period for your utilities costs. So that would be the utilities incurred and the expenses incurred within that 8-week period or 56 days from when you receive the loan. So you wouldn't be shifting that date. If you had utility expenses that you're being billed for electricity used, let's say back in March or February, that wouldn't count towards this. It would only be what you were billed for or what you used for utilities during the 8-week period. Let's see here. Questions about exceeding the 25% for non-payroll costs and how that affects forgiveness. So what you end up having to do, and I think Amanda explained it really well in going through the application, is if you did exceed 25% for the forgivable cost, you just have to recalculate your figures and bring that number down so that all that won't be forgivable. You just have to shake it around so that 75% of your forgivable amount is payroll costs, and no more than 25% is the non-payroll costs. Examples of other types of rent aside from, so this was another nice surprise I felt in the instructions and in the forgiveness form. So in addition to the rent that you pay for your actual office space or storefront or building, you can also now claim other rents and leases. So if you're leasing office equipment or lease a company-owned automobile and things like that, that can be used towards those non-payroll costs. Again, capped at 25% of the forgivable amount.
Yeah, I think we're on the hour here. So why don't we, did you have any last minute thoughts that you wanted to share, Paul?
Yeah, I mean, just keep your eyes peeled. The team here at MassPay is staying on top of it and checking in with the SBA throughout each day. So while we have a lot more than we knew this time last week, there's still a lot more to learn and understand. So we're eagerly awaiting that, and we're on top of it. So just stay tuned and keep your eyes peeled from communications for us for the latest and greatest, and we'll get you where you need to be.
Great. So I think we have, here are some resources that we thought would be helpful for you. We have the PPP loan FAQs through the Treasury. It's like a slow drip. They're updating these kind of question by question. So keep your eyes peeled for that. And we continue to check in every day on those. We have the link to the loan forgiveness application for you. And then little shameless plug here, we have our MP COVID-19 resource page that we will continue to update. And with that, I will throw it over to Jackie to take us home.
Awesome. Thank you so much, Amanda. Thank you to the other Amanda and Paul also for presenting and moderating today. Thank all of you for attending this webinar. And if you've attended any of our other webinars before, we sincerely appreciate that. We also want to make you aware that MP is offering a free HR consultation to all who register for our webinars. This consultation is going to include 3 things. The first thing being a consultation on critical HR topics like PTO tracking, interacting with unemployment. The second thing is CARES Act advice and guidance on accessing resources you need, including how to navigate PPP loan forgiveness. And third is a complimentary invoice review of your current HR and payroll provider to identify cost-saving opportunities. If you'd like to ask another question or just have comments, please send anything to marketing@masspay.net. We sincerely appreciate you being on our webinars, and we hope that you stay healthy and have a fantastic weekend. Thank you.
Thanks, everyone. Happy Memorial Day.